Alright, let's break down the trades plural of the day. Going into the day, the bias was bearish. We had this 4 hour fair value gap that we were actively trading inside of. Market structure is clearly bearish. We're trading lower. So I was looking for continuation shorts. I wanted to see us first tap into this hourly fair value gap, which is the same place where equilibrium is, high time from equilibrium. Once I saw that gap tap, then I knew that we would be going lower. Let's just go straight to the 5. Market opens and we take out, oops. Market opens and we take out a pre-market low here. As you can see, Nasdaq took it out, whereas S&P 500 did not. So that is a bullish S&T. We end up trading higher after that tap, or after that sweep, sorry, and we tap that hourly fair value gap resting above that unfilled hourly, and we also tap into high time frame equilibrium. So now we are in a premium to short. And on top of that, we have a bearish S&T, which is just like absolutely perfect. We tap into this area around here, and then S&P 500 ends up taking that high at that time. And we have this bearish S&T paired with high time frame equilibrium and a premium to go short inside of an hourly fair value gap to go short, and then we get a 2-minute inversion to the downside, as you can see right here. This is a beautiful fucking trade. This is perfect. If you didn't take this trade, you're a dumbass. There's no reason why you shouldn't be taking this trade. You could have easily targeted that immediate 930 low. I know a lot of traders did do that. If you did, that's great. I'm on an eval and I'm on zero balance accounts, and yes, I could have just secured, whatever that was. I think it was like $1,100, but I'm on eval. Shit's not real, So I wanted to target all the way at the bottom of this low here, and we ended up getting stopped break even, which is no big deal. Then we give a 5-minute continuation short. We tap in the 5-minute, and we get a small 1-minute inversion right there. And this immediately actually gets stopped out, which is slightly unfortunate. And I'll explain why. This got stopped out not because it was your technical analysis was wrong. It got stopped out because at this point right here, ES left equal highs. It left equal highs right here. See, boom, boom. And in order for Nasdaq to go lower and take out this low down here, what S&P needed to do was resweep these two equal highs. And the same thing happens on Nasdaq. We end up getting stopped out, right? But because S&P 500 reswept this high here, we create another bearish S&T, an internal bearish S&T, as you can see here. Boom, internal S&T. Then we get a 1-minute inverse here, and then we're able to short all the way down to these lows. So break even, loss, and then a winning trade. This I would rate as an A plus. Honestly, this is an A plus trade. This first trade is A plus trade. Everything you did here was just beautiful and perfect. Only critique I would have made is maybe if I'm gonna XFA, I would have been targeting. Excuse me. I would have been targeting this low here instead of this low all the way down here. This is a little bit overzealous. An 113-point move is a little overzealous to me. I would have been very happy with a 7-8 point trade. That's what I would have done differently. But I'm on evals, like I said, so I'm trying to get a little bit more bang for my buck because this is not real and I'm not going to be on here forever. The second trade I rate as a B. The overall continuation of itself, tapping into the 5 with a 1-minute inversion. Market structure is clearly bearish. We're delivering out of the hourly, and that equilibrium is great. But I give it a B because at that point in time right here is where ES left those equal highs like we were talking about. Boom, boom. And because we left those equal highs, there was a probability that because ES is going to want to go back and take out those equal highs, and as you know, Nasdaq and S&P are pairs, so if one thing does one thing, the other thing's going to do the other. So if S&P 500 starts rallying up a little bit to take out that high, Nasdaq's going to want to do the same exact shit, which it does, and we end up getting stopped out because of that. Now, after that resweep, then this third execution I rate as an A++, because now we have a high time frame bearish S&T. We're delivering from high time frame equilibrium. We're delivering from high time frame hourly for value gap. We're clearly in bearish structure. We retap into this 5-minute bearish for value gap. We have an internal bearish S&T. We have a beautiful displacement candle to the downside, 1 minute inversion with not stacked lows, with trend line liquidity resting below us. We generated liquidity now, so it would make sense for us to go lower. This is high time frame up here, high time frame protected liquidity. This is a lower time frame LRL. It would make sense for us to run all this LRL, and we did, and this is beautiful. Look at this. We just fucking bottom ticket. Boom. What a beautiful trade. If you took that trade, you're the fucking man. That pretty much is it. That breaks down the day. I will be honest. I took this first trade. I got break even. God, I'm so tired. I took the second trade, which is kind of stupid, kind of FOMO'd a little bit. Got stopped out, and because I got stopped out, my account balance there's like nothing left. It was like $100, so I just closed the account, and I couldn't risk it on this one. Even if I did enter in this trade here, I probably would have gotten stopped out just from this wick alone. I literally had no balance left. So, yep, that was the trade. The 3 trades of the day. If you took trades 1 and 3, you know what you're doing. 2, you just need a little bit more technical analysis. So, yep, that's it. Catch you guys in the next one. Peace.